Hey there, fellow Nigerians. Ever wondered how our economy works its magic? Well, buckle up because we're diving into the fascinating world of monetary policy. Think of it like this. Monetary policy is like a giant steering wheel for the economy. Just like a driver uses a steering wheel to control a car, the government uses monetary policy to steer the economy in the right direction. And who's the captain of this economic ship? That's the Central Bank of Nigeria, or CBN for short. It's the puppet master behind the scenes, pulling the strings of our financial lives. All right, let's talk about the CBN, the big kahuna of Nigeria's monetary policy. They're like the conductors of an orchestra, except instead of instruments, they're dealing with money, interest rates, and all that jazz. Their main gig is to keep the economy stable. Think of them as the economic superheroes, fighting inflation and keeping things in check. One of their main weapons in this economic battle is something called interest rates. Now, interest rates are like the price of money. When you borrow money from a bank, you have to pay interest. And when you save money, the bank pays you interest. It's a delicate balancing act, like trying to walk a tightrope while juggling chainsaws. Now, let's dive a little deeper into this whole interest rate thing, shall we? It's a fascinating topic that affects all of us in more ways than we might realize. As we mentioned earlier, interest rates are like the price tag on money. Just like how every item in a store has a price tag, money too has a cost associated with it. When you borrow money, the interest rate is like the rental fee you pay for using that money. It's the cost of having access to funds that aren't yours.
Think of it this way. Let's say you want to buy a new car, but you don't have all the cash up front. You need to find a way to finance your purchase. You go to the bank to get a loan. The bank is willing to help you out, but there's a catch. The bank says, sure, we'll lend you the money, but you have to pay us back with interest. This interest is the bank's way of making a profit from lending you the money. When interest rates are high, it's like trying to rent a Ferrari. It's going to cost you an arm and a leg. High interest rates make borrowing very expensive. So people and businesses tend to borrow less, which slows down spending. This can lead to a slowdown in economic activity. But when interest rates are low, it's like renting a Toyota Corolla, much more affordable. Low interest rates encourage borrowing and spending. Borrowing becomes more attractive, people have more money to spend, and the economy gets a boost. This increased spending can lead to economic growth and prosperity for everyone.
Section 4, inflation, when prices go bananas.
Okay, folks, let's talk about inflation, the arch nemesis of stable prices.
Inflation is like that annoying friend who always eats your snacks and never brings any of their own.
It's the reason why prices seem to go up faster than your salary.
You see, when there's too much money floating around in the economy, it's like a game of musical chairs with too few chairs.
Everyone's got money to spend, but there aren't enough goods and services to go around.
So what happens? Prices go up.
The CBN's job is to keep inflation in check, like a strict teacher maintaining order in a classroom full of rowdy students.
So, you're probably wondering, how does monetary policy affect your wallet? It's a question that impacts everyone, whether you're aware of it or not.
Well, it's pretty straightforward, but also quite intricate when you dive deeper. When the Central Bank of Nigeria, or CBN, adjusts interest rates, it directly impacts how much you pay on loans and how much you earn on savings. This can affect your daily financial decisions.
For example, if interest rates go up, borrowing money becomes more expensive. This means you might think twice before taking out a loan. That means higher mortgage payments, car loans, and even credit card bills. It can really add up and affect your monthly budget.
On the flip side, higher interest rates can mean better returns on savings accounts and investments, which is good news for savers. Your money can grow more efficiently.
The CBN also controls the money supply, which can influence inflation and purchasing power. This affects how much your money is worth in the market.
So, yeah, monetary policy can feel like a double-edged sword. It has both positive and negative effects on your financial well-being. It's all about finding that sweet spot to keep the economy stable. Balancing these factors is crucial for long-term financial health.
So, how can you stay ahead and make the most of your money in today's ever-changing financial landscape?
First, keep an eye on the news and updates from the Central Bank of Nigeria. Regularly checking financial news can give you a heads up on important changes. They often announce changes in monetary policy that can affect your finances, such as interest rate adjustments or new banking regulations.
Also, consider consulting with a wealth advisor who can help you navigate these changes and optimize your financial strategy. A professional can provide personalized advice tailored to your unique situation.
It's also wise to diversify your investments. Don't put all your eggs in one basket. Spread your investments across different sectors to minimize risk.
And remember, knowledge is power. The more you understand about monetary policy and its effects, the better prepared you'll be to make informed financial decisions. Attend seminars, read financial literature, and stay curious.
So, stay informed, take charge, and make your money work for you. Thanks for joining us. And don't forget to subscribe for more insights on Nigeria's monetary policy and how it affects you. Stay tuned for more tips and strategies to secure your financial future.